So today we're diving into something that really caught my eye.
Okay.
This Motley Fool piece that basically makes the case that Realty Income, ticker symbol O.
Right.
They're saying this could be like the ultimate dividend stock for anyone looking to build some serious passive income over a lifetime. So we're going to unpack that, really dig into what makes them think that, and ultimately try to see if it really adds up for someone like our listeners who are really interested in these kinds of investments.
Yeah. No, that's a pretty bold claim, right?
It is.
When you think about it. I mean, the Motley Fool's been around since, 93, I think?
Yeah, long time.
They've been helping investors. They want to make finance, easier to understand.
Yeah.
They've got all that free stuff on Fool.com, premium services too.
Right.
Even a nonprofit side to what they do.
Yeah.
So when they come out and say, hey, this particular stock has got this amazing long-term dividend potential.
Yeah.
It's worth taking a serious look,
Absolutely. Yeah, and their whole argument really seems to hinge on this idea that Realty Income has this, a trifecta. You've got this high dividend yield. They pay you every month, which is always nice.
Yeah.
And then on top of that, their dividend just keeps growing.
Okay.
And all of that is built on, what they say is a really solid business that's only getting bigger.
Right.
So let's start with that first piece. What makes their dividend so attractive in the first place?
So right away, that yield is what grabs you, right?
Yeah.
The article says Realty Income's yield is somewhere around 5.7%. And to give you some context, they point out that when this was written, the S&P 500 was only yielding 1.3%.
Okay.
That's a huge difference.
Yeah.
Basically, for every $100 you invest, Realty Income's giving you back almost $6 a year in dividends, compared to $1.30 from the average S&P 500 company.
Yeah, that's a big difference.
If you're all about that passive income,
right,
that higher yield is super tempting.
It is. And then there's the frequency, right?
Right.
Most companies, they pay you every quarter.
Right.
But Realty Income, it's every single month.
Yeah, that's a nice perk.
Yeah, and that can really make a difference if you're thinking about using that income for helping cover your bills or just wanting a more consistent cash flow.
Yeah, it's like getting a little bonus check every month.
Exactly.
Definitely helps with budgeting, having that predictable income stream.
For sure. But, as the article kind of hints at, just having a high yield doesn't mean everything, right?
Right.
Sometimes that can be a red flag.
Yeah, like the company's struggling or something.
Exactly.
Right.
And they might not be able to keep paying that much.
Exactly.
So the big question here is, how sustainable is Realty Income's dividend?
Right. And that's where they really get into, the nuts and bolts of the company and why they're so solid. And the first thing is this massive property portfolio.
Yeah, they're huge.
Over 15,600 properties.
Wow.
In 8 different countries.
And we're not talking about, just a bunch of apartments.
Yeah,
right?
this is commercial real estate.
Yeah.
Net lease to 1,565 different clients.
Yeah, it's incredibly diverse.
Across 89 industries.
89 different industries. That's wild.
Yeah, and that net lease structure is really important here.
Okay, so what is that exactly?
So basically, with a net lease, the tenants are the ones responsible for most of the operating expenses. So all the routine maintenance, property taxes, insurance.
Okay.
It's like if you were renting a house, but the renter was responsible for mowing the lawn and fixing leaky faucets.
Got it.
So for Realty Income, this means they're not on the hook for a lot of those unpredictable costs.
Yeah, that makes sense.
Which makes their income much more stable and predictable.
That makes a lot of sense. And they're not renting to just any random business either, right?
Oh, definitely not.
Yeah.
The article mentions some big names.
Yeah.
Like 7-Eleven, FedEx, Walmart.
Yeah, those are some pretty stable companies.
Exactly. These are businesses that are pretty much always going to be around.
Yeah.
So it's not like their income depends on a bunch of risky tenants.
That's good. And didn't they say that a lot of their tenants are in industries that are recession-proof?
Yeah, the article says 91% of the rent comes from industries that are considered pretty resilient. They can weather economic downturns and aren't really threatened by e-commerce.
So things like grocery stores and pharmacies.
Exactly.
Discount retailers.
Yep, convenience stores.
Okay.
The kind of businesses that people need no matter what's going on in the economy.
Makes sense. So it's not just about the big names. It's the fact that they've got so many different kinds of businesses spread out geographically that really reduces their risk.
For sure. Diversification is key.
Yeah. So if one industry or region hits a rough patch,
it doesn't tank their whole income stream.
Exactly, because they've got so many other sources of revenue.
Right. Okay, so that diversification is a big plus. But what about their financials? Like, are they actually managing their money well?
Oh, yeah, they go into that too. They talk about how their dividend payout was less than 75% of their adjusted funds from operations, or FFO, last year.
Okay,
Yeah.
so FO, that's basically how much cash they're actually making from their properties, right?
Yeah, exactly. It's a key metric for REITs, like realty income.
Got it.
And that payout ratio being under 75%, that's generally considered a healthy sign.
Okay.
It means they're not using up all their cash to pay dividends,
Right.
which leaves them with a nice cushion.
Mm-hmm.
Actually, the article says almost $930 million.
Wow, so they've got some wiggle room.
Yeah, and they can use that money to reinvest in the business,
Right.
grow even more, maybe buy some new properties,
Okay.
or just have it as a safety net if things get tough economically. Right, so it's not just about paying out as much as they can right now.
Right, they're thinking long term.
Yeah, that's smart. And what about their credit rating? Is that a good indicator of how financially sound they are?
Yeah, the article points out that they have really strong credit ratings.
Okay.
Like, they're one of only a handful of REITs in the S&P 500 with bond ratings of A3/A- or better, which basically means they're seen as a very safe bet by lenders.
Okay, so that's a good sign.
Yeah, and it lets them borrow money at lower rates.
Which makes a big difference for a company like this, right?
Absolutely. So, yeah, it looks like that nice high yield, and those monthly payments aren't just some fluke.
Yeah.
They're backed up by a really solid portfolio.
Right.
And some smart financial decisions.
Okay, so that's all good for right now, but what about the future? Like, can they keep this up?
Right, so that's where the growth story comes in.
Okay.
And it's pretty impressive, actually. The article highlights how consistently they've grown over time. Since they went public back in '94, Realty income has increased its adjusted FFO per share every single year, except for 2009 during the financial crisis.
Wow.
So they've been through ups and downs in the economy and still managed to grow.
Yeah, that's a good sign.
Yeah, and their FFO per share has grown at an average rate of 5% per year over the last 30 years.
Okay.
And you can see when you look at their FFO growth compared to their dividend increases,
Yeah.
they're managing things carefully to make sure they can keep paying those dividends.
Yeah, that's smart. So they've got a solid history of growing their income, which means they've been able to increase their dividend too, right?
Oh, absolutely. They've boosted their dividend 130 times since going public.
130 times. That's insane.
Yeah, and it's not just like tiny increases either.
Yeah.
They've been steadily rewarding their investors with bigger and bigger payouts over time.
Wow.
And get this, they've increased their dividend every single year for 30 years straight.
Wow.
And for 110 quarters in a row.
That's incredible.
Yeah, for someone who's looking to build long-term passive income,
Yeah.
that kind of consistency is like gold.
It is, and the dividend itself has grown at an average rate of 4.3% per year over the last 3 decades.
Which is amazing when you think about the power of compounding over the long term.
Absolutely. So they've got the attractive payout, the history of increasing it, but what about going forward?
Well, that's where things get really interesting because the article seems pretty bullish on Realty Income's growth potential.
Okay.
And this is where we're talking serious long-term potential.
Okay.
They're already the 7th largest REIT globally.
Yep.
With over $58 billion in real estate.
Yeah, they're huge.
But they believe they've only just scratched the surface.
Really?
They estimate there's a potential $5.4 trillion worth of net lease real estate opportunities just in the U.S. alone.
Trillion with a T.
Yeah, it's almost mind-boggling.
It is. So even though they're already this giant company,
Right.
they're saying there's still so much room to grow.
Yeah.
Exactly.
Wow, and it doesn't stop there, right?
Nope. They also see a massive $8.5 trillion potential in the European net lease market.
Okay, so they're going global.
Yep. And they're also branching out into new types of properties.
Okay, like what?
Data centers, which are super important for all our, online stuff.
Yeah.
And even gaming properties.
Oh, interesting.
That alone adds another $700 billion to their potential investment opportunities.
So they're not just sticking with the traditional retail and industrial properties.
Right. They're looking for growth wherever they can find it.
Makes sense. So data centers and gaming, how do those fit into their strategy?
It's all about tapping into sectors that are on the rise.
Okay.
Like data centers are essential for everything we do online.
Yeah.
cloud computing, streaming services, all that. And they require huge long-term investments.
Makes sense.
And gaming properties can also offer attractive long-term leases.
Okay, so it's about diversifying into areas that are going to be in demand for a long time. Exactly. They're thinking ahead and making sure they can keep growing their income.
And that European expansion, that's got to be a big part of their growth plan, too.
Oh, yeah. Moving into new countries opens up a whole new world of possibilities.
Right.
New tenants, new acquisitions, tons of potential.
So they're really pulling out all the stops to keep expanding.
They're not slowing down anytime soon.
And they're not just buying and leasing properties anymore, right?
Yeah, they've got a credit investment platform now.
What's that?
So basically, they provide financing for real estate projects.
Okay.
Which gives them another way to generate income.
Makes sense.
And they've also started a private capital fund management business.
Okay.
Which lets them tap into the huge U.S. private real estate market.
Wow.
That's a market worth like $18.8 trillion.
Okay, so they're really branching out beyond just owning and operating properties.
Exactly. They're finding new and creative ways to grow.
Yeah, so it's pretty clear they're not just sitting back and relaxing.
Nope. They're ambitious, and they're looking for every opportunity to expand.
Which is good news for their investors, right?
Yeah, all that growth potential means they should be able to keep increasing those dividend payments for a long time.
That's the takeaway, right?
Yeah, that's really the heart of the Motley Fool's argument.
Yeah.
They're saying Realty Income has this amazing combination of high-yield monthly payments, a long history of dividend growth, and all this potential for future growth.
Yeah.
It's like the perfect recipe for long-term passive income.
That does sound pretty good.
And they really emphasize that this isn't just some lucky streak.
Right.
It's all based on their diversified, high-quality property portfolio, their smart financial management, and their consistent profitability.
Okay, so bringing this back to our listeners, if you're someone who's really looking for that steady, reliable, passive income to help you reach your financial goals, Realty Income, as the Motley Fool describes them, could be a really interesting option to consider.
For sure.
We've really dug into their business model.
We have.
Their tenant base, their financials.
Yeah.
All of that gives you a much clearer picture of what makes this potential lifetime dividend so compelling.
Yeah. But of course, any investment decision should be based on your own research.
Absolutely.
Your own financial goals, your risk tolerance, all that good stuff.
Right.
No investment is ever a sure thing.
Of course.
And even companies with a great track record can run into unexpected problems.
Yeah, that's always important to remember. Okay, so as we wrap up this deep dive, here's something to think about.
Okay.
Realty Income's moving into these new areas like data centers and gaming.
Right.
How might that affect their dividend in the long run? Will it make it more stable or maybe even grow faster?
Yeah.
And what about risks? Like what could happen in those industries that might throw a wrench in their plans?
Yeah, good question.
And what should investors be keeping an eye on to stay ahead of the curve?
Right.
Lots to think about as you continue your own investment journey. Thanks for joining us for this deep dive.
Thanks for having me.
And we'll see you next time.
See you later.
Bye.